We're nearing the end of the third quarter, and cannabis stocks have been lagging. They're among the worst performers on the TSX over the last 3 months. And with the second wave of legalization less than a month away, can these stocks bounce back? Matt Bottomley, analyst at Canaccord Genuity, joins us now for some perspective. We don't often talk about these kind of industry-specific catalysts that could lead to a re-rating in the sector. Maybe just take us behind your thinking on what exactly is the second wave of legalization and what it could mean for the sector.
Yeah, so there's sort of two major classifications of catalysts we're looking for. One is in the Canadian market with respect to Cannabis 2.0 coming. That's going to be a mid-December event, so we're really not going to see any great data points until we get further on into the new year. The second classification I look at is actually on the U.S. side of things, where we have the state, or the Safe Banking Act rather, that's going through the Congress later this week, and that's something that could sort of open up the banking down south of the border that again could get excitement on some of the U.S. names.
You highlight though that this sell-off has been kind of agnostic to geography. It's been both the Canadian producers and the U.S. multi-state operators. What's going on?
Yeah, well, there's been a confluence of some headlines that are quite negative. I think the Juul headline as of late could be something that's contributing to it, although that's more of
about e-cigarettes.
E-cigarettes, yeah. Some of the nicotine players there that might even be in illicit channels with respect to how they manufacture. There was some vitamin E acetate, I think, was the component that was in there. So there's just sort of a negative headline every couple of weeks now that I think is draining on investors' confidence. But again, valuations were at all-time highs sort of at April, May. So you have to keep that in context as well, that we've seen a lot of different cycles over the past, certainly 3 years since I've been looking at the sector, with a lot of ups and downs. And I expect volatility even in the good days to continue.
I wonder where accountability comes in, because we mentioned the 3-month lag in these stocks. I see of the 10 worst performing stocks on the TSX in the last 3 months, you've got 4 well-known cannabis companies that are right on that list. Canopy down more than 40%. Kronos not too far off from that. Aurora and Hexo all down between 20 and 40%. You add that up, that's $13 billion in market cap wiped out. And we always knew these companies would have to report quarterly results, and in many cases they've come out with disappointing numbers. Do you feel like there was accountability at the management side when it comes to these companies?
Well, on a case-by-case basis, certainly there's an argument for that, and other companies have underperformed some of their peers, both in Canada and in the U.S. But I think when you look at what's happened in this sector, there's been a tremendous amount of excitement as to when these companies will become profitable, and both Canopy's and Aurora's earnings calls certainly punted that down the road. And it kind of dries up the catalyst in terms of investors that are circling the space, and there are many, are thinking, well, why would I buy now when we can wait to see how the dogfighting plays out into the new market? But it's one of these sectors where you wake up and Constellation puts $5 billion into Canopy and Altria. You can't predict when these catalysts come in, so it's hard to play it. You don't want to get too cute with it, but certainly there's sort of been a lack of excitement, given that we know there's another 3 to 6 months before the second market of 2.0 starts ramping up.
But it's been a while since we've heard a kind of blockbuster announcement like that, like a Constellation or Altria. And I'm just wondering how you think about valuations and whether it's tempting enough to bring some of these players back in, which have watched what Constellation has done, which has watched what Altria has done, and said, well, maybe they're not really getting the biggest bang for their buck right now. Have valuations come in at a more reasonable level that could attract not only the strategic investor, but also the institutional or retail? Sure,
I think valuation's a big component of it, but I think almost as important is just clarity. People want to see, what is this market going to look like next year? When will a Canopy, for example, which is the bellwether, become profitable? And I even think now there's a lot of excitement over a lot of these U.S. multi-state players, where potentially if a Safe Banking Act goes through, if a States Act goes through in the next 6 to 12 months, maybe it's not the next Canopy that gets an investment, maybe it's a Curaleaf. And I think that there might be strategic investors out there that, of course, would want to get access to the U.S. market right away, but there's a lot more uncertainty as to when that might be possible. Do you have good visibility into when you think Canopy will be profitable? Well, not specifically. I think that you can take the guidance that they gave on the call, and they're going to be profitable in the next 12 months, sort of in a Canadian standalone basis. Another 6 to 12 months after that on international and consolidated level. So they have a June fiscal year end. So their fiscal 2021 is really where it's being benchmarked in terms of it being inflecting over. I guess my question is, have they painted a roadmap that is clear to you and clear to other investors as to how they get there? Well, sure. I mean, really, the first and foremost is continued execution in the Canadian sector. We need to see more retail, ramp up province by province. We need to see more product breadths come online. This has nothing to do with Canopy or any specific company. So they really need those overhangs to really crystallize. And if you look at, some markets like in Florida and other places in the U.S., you can get 30, 40% EBITDA margins if you're vertically integrated and don't have the government sort of involved at every step of the way. So in Canada, a 20 to 30% margin if you're a leader and if people start paying for your brand as opposed to, well, who can just fill these purchase orders, because right now it's a bit of a dogfight just with execution. But at some point it's going to become a little more normalized, and then it's going to be about what products actually sell on these shelves, assuming we have more shelves in Canada, and will they get reordered from the provinces, and then do you pay for the Tweed vape pen or whatever it is as opposed to what's available when you walk in, which is really the dynamic right now.
And let's talk about, off the top, you talked about one of the near-term catalysts taking place in the U.S., this cannabis banking bill. And maybe you can explain this a little bit to our audience. We've talked a little bit about this, but the idea that if you want to see a clear path towards legalization in more markets in the U.S., you've got to see more clarity for the banking industry in working directly with the cannabis. If they can't work with the banks, then you can't really run a business. So how significant is this bill in your estimation?
I think it's significant. It's not. It doesn't have as much of a capital markets implication than, let's say, a States Act, which we can talk about that as well.
Sure.
But the Safe Banking Act basically will allow state-by-state operators to really maybe leverage away from working with these state-chartered banks. You have a different contact in every state. You can't get real estate lending. You certainly, can't sell product over state lines or anything like that. So the Safe Banking Act will really allow these companies to potentially become more efficient at their operation levels, not have to, sell
duffel bags with actual cash.
Yeah, I don't think it's that much anymore. I think Colorado in year one there was barrels of cash, I heard, but there are enough state-chartered bank accounts that are doing it. But it's something that incrementally moves the sector in the right direction. It shows that there is a real business and a real opportunity that's starting to crystallize in the U.S. And obviously, it's something that makes operators more efficient and should help their bottom lines, at least directionally positive. So the States Act is something which is another piece of legislation which could actually see maybe the NYSE or other exchange consider, I don't know for sure, but consider maybe listing these companies should that go through.
Okay, so we'll watch for that one as well. Good to get your perspective as always. Thanks, Matt.
Thank you.
Matt Bottomley, analyst at Canaccord Genuity, with the latest on the cannabis stocks.